The US stock market slid into a strong correction last week. However, it managed to reverse sharply upwards and reach the annual highs again. Many experts assumed that it was the start of a big correction, yet it was just a small pullback before new rapid growth. At the same time, the speculative bubble in the market is getting bigger. Investors literally ignore negative news, such as high inflation and the Fed's statements about the possible tightening of monetary policy in November this year. In addition to a speculative bubble, there is a boom in the US real estate market. Demand for houses does not decrease despite a spike in prices. How may these factors affect the stock market in the near future? Watch our video review and find out. The Dow Jones did not change much last week. It has been trading in the same range for the second week in a row. Now it's trading at 35,400. It will probably be unable to reach a new high. After all, the Fed's meeting minutes for July showed that the majority of FOMC members supported the reduction of asset purchases by the end of this year. It is not yet clear whether the Fed is ready to announce a gradual quantitative easing tapering at the next meeting in September. Probably this is the main reason why the Dow Jones index will remain stuck in the range of 35,200 – 35,500 points. The S&P 500 index continues to grow steadily after the resumption of the uptrend. Even though the quotes climbed during the week, the index was only able to break above the high of last week. Now trading is conducted at a level of 4,485. The index is likely to approach the strong resistance level of 4,500 points. Its further trajectory depends on market sentiment sensitive to economic reports which are due this week. A temporary rebound from the resistance level by several points looks likely. The NASDAQ composite unexpectedly jumped to a historical high. Now the index is trading at the level of 15,400. The main driver for its growth is expectations of Fed Chairman Jerome Powell's testimony at the Jackson Hole Economic Symposium. Some analysts believe that the Fed will officially announce its intention to taper the QE program. This is the program that enables the central bank to purchase predetermined amounts of government bonds or other financial assets in order to inject money into the economy. In addition, positive statistics on the US real estate market were published. The positive data generally improves market sentiment. The NASDAQ index is forecast to remain in the current range of 14,800 – 15,300 points. At the moment, there are no drivers that may push the index to the new historical highs. However, this may change very soon. Uber shares lost about 4% this week after a California judge ruled that Uber and other delivery service drivers should be classified as employees eligible for benefits and job protections. As a result, a 2020 ballot measure that exempted delivery drivers from a state labor law is now unconstitutional. This may lead to an increase in the costs of cab aggregators. Yet the quotes of the company's shares have already recovered. But for how long? Boeing shares showed a similar dynamic. They have fallen by more than $5 in a week. Although at the end of the last week, the decline was more than $12 per share. Now the correction may continue, so those who are betting on the growth of Boeing shares should be extremely careful. At the same time, the crypto market rarely disappoints investors these days. After Bitcoin soared to $50,000, the shares of companies engaged in the crypto industry climbed significantly. The biggest gainers were MicroStrategy and even Nvidia. This is why it's still relevant to watch closely companies in the IT sector. In general, investors now refrain from long-term investments as they are waiting for a big correction. The US stock market has risen sharply since April 2020. Until last week, it did not drop. For this reason, the S&P 500 index, as one of the main barometers of the state of the US economy, grew by a third last week. This looks like the last stage of the stock market growth in this economic cycle, which began in the spring of 2009. Well, this is the end of our video review. Thank you so much for watching and stay tuned.